Well, I mean, another interesting one, and it's conjecture at the moment, and we know that we should never underestimate these things from the Brexit vote. I think, though, there is a tendency when you've had something like Brexit to overestimate tail events continuing to happen. It seems pretty certain that Hillary Clinton's going to get in now. I think the recent polls are suggesting that is very much the direction of travel, and you have to say that at the moment that seems the most likely outcome. Well, this is an interesting one. So, on the one hand, it creates a lot of uncertainty because you don't know exactly what Donald Trump's going to do. On the other hand, when Donald Trump goes into power, if that happened, he would be very constrained, and can see what's happened with the Obama administration as well. If you actually look from an economic perspective at what he's proposed corporation tax cuts, and that actually is a big positive for markets. So, counterintuitively, some of the policies that he's suggesting, if implemented, would actually enhance the value of the stock market. Although you have to say sentiment would take a turn for the worse if it happened. I think it would be fairly short-lived. He is, there's a degree of control in the US political system means that it's very difficult to implement major changes. So he would be emasculated to a certain extent. And if he did implement things like corporation tax cuts, that would actually be a medium-term positive for markets. Yes, so we think that the US is still, and in fact that view has been enhanced further with the political turbulence that we're seeing in Europe. We still think that the US is the best Western economy. We're continuing to see real evidence of wage growth coming through, and more sustainability in the economic recovery. Wage growth is good because it will eventually increase consumption, and consumption is 2/3 of US GDP. However, it doesn't necessarily mean higher stock prices because higher wages mean lower profit margins. So we like the UK economy. We think the US economy. We think US GDP will continue to increase, but we think that the stock market looks overvalued. I still think there will be an interest rate increase before the year end. The economic data started to weaken marginally. Some of the company results have weakened a little bit, but ultimately it was deferred on the back of the Brexit vote. So the US, as far as we're concerned, is overdue an interest rate increase. And actually going into next year, we think rate increases will come through faster than the market's expecting. Well, the risk is if the recovery isn't sustainable, and if the economic data takes a turn for the worse, then you basically choke growth. We know that the economy will be incredibly sensitive to increases in interest rates, so you can choke growth before it's fully established. However, we know from taper tantrum and previous Fed action, if that happens, they'll just cut rates. So it's a signal of intent, but the Fed won't lose face by changing their stance, and have proven that historically.